Happy Friday, Pat. We've managed to eke our way through all the way up to another Friday.
Exactly.
Get in front of our millions and millions of viewers. I was testing something because we get to see how many people are watching live, sometimes it's just not accurate. It'll say like 36, and we know it's 36 million. So I added a millimeter here, so it adds digits there. So that the public can't see the eyeball and the number of viewers that we actually have live here like we can, but that makes us feel better about it. And in showing that, I just lost one viewer. So see, when you leave, I know it, but I don't know who you are. So that's the fun part about this. And speaking about that, we have I thought we had a comment, but it's that doggone Stream Elements bot. So I don't know what that thing's about. So speaking about viewers, Pat and I are going to be at Oso Brewery in downtown Gilbert on Wednesday, the 14th from 5 to 7. So stop in and say hi. I know you missed our last event. This is a no host. We're just going to be there. And thought we'd toss out an invite so we can get an opportunity to meet some people. So thought that'd be fun. Want to jump into rates in a couple of minutes here, but I want to start with something that I found out today. And Cato says, I got a comment. So you have one coming, or you got one from the bot? So I've tried to get rid of that thing. I don't know why it's there. And as techie as I think I am, that one has befuddled me. So I've been talking a lot about open doors, right? And this just really, I was thinking, what's their strategy going forward? They have like 1,250 homes now. A lot of them sitting out there over 100 days. They obviously are not trying to clear books by the end of the quarter and write them off. So what are they doing? And I looked this morning because we had a change on a listing that we've been following yesterday. And check this out. 181 of their listings have been put on temporary off the market status. That's all those dots there. And when I look in the details, it says that, and I think maybe this one might say it. We'll see if it does. This one doesn't say it, but they're all doing kind of the same thing. They said taking temporarily off the market for renovations. So, Cato, thanks. We're glad we IZMs and all isms. We got to have the Pat isms. So they're gonna, to me, I think it looks like they're gonna take a second round to go in and do what they should have done in the first place. As I looked at one in Maricopa last week, and oh my God, I mean, just the shortcuts they took. The thing, even around the ceiling, where they painted or put tape, like around a ceiling fan, the base, they never took the tape off. They missed all kinds of spots. They went and did the absolute bare minimum. And I don't know if they're strategizing or not, but here's my theory. If you've had your eye on an open door home and that has been pulled off as a temporary listing, let's shoot them an offer and say, hey, we can save you some renovation costs. We'd rather have my client renovate it himself. And so I'm going to give that a shot this weekend and let you know how that transpires. But I thought that was quite interesting.
I mean, that's interesting. I mean, that's stuff that you're not going to see. They're not going to publicize that. we took off 180. We took off 182 homes temporarily off the market to see what the hell's going on. Or I mean, like that one house you're looking at that you talked about. The client was saying, they're probably gonna take it off. When we were talking to them, and you said, probably gonna put some paint on it, and I mean, they're into the house for 561. What was it? 561, 579, or something like 579?
Somewhere around that ballpark. And
they dropped it to 479.
Yeah, and they got it 479. It's been on the market 165 days.
Yeah, and they were into it for 541. So, okay, the house is 479 right now. They're into it for 541. They're going to take it off the market and add more money into it. And increase their cost basis and hope they can sell for $579 or $580.
It's
80?
still not going to be. It's still not going to be worth over where it's priced now. I mean,
Yeah.
it's and they're really getting hurt in the outlying areas where there's new construction, because you're going to look at that and go, okay, they've lowered the price, but I still get better value of the newer homes down the street. They may be smaller footprint, but they're in much better shape. So this one, I mean, they'd have to put, I don't know, I don't think they're going to have to put 50 or 60 grand into it, but they're going to have to stretch and do something. The floor is terrible.
I just
some
thought of
windows.
something. I just thought of something. It's kind of like I'm back on Match.com. I'm exposing my probably TMI as far as my single life, but it's probably like a woman that's been on Match.com for like the last 2 years, and she takes her post down to repost new pictures and redo her profile, and it's like, hey, you're still the same woman that's been up there for the last 2 years.
Yeah, that's what they said when you took pictures with your motorcycle. But here's where we're at on the active listing counts. Now, it's interesting, Pat, is we always go down the holidays, but you would think with sales being as bad as they are right now that this would be going the other way. And we're coming down faster than years past. So you'd think it'd be going up. And then I look, and here it's interesting here. Let's take a look at week 13, which is
active listing. Because if you look at that chart though, real quickly though, I mean, going down, active listings means there's obviously less supply out there.
Less supply. Yeah. And with sales slow, supply should be going up, and it's not. Now, right down here, this is week 13. See where it broke away from, let's see, what year is this? This is 2021. See where the listing started exceeding the 2021 numbers? So you go to week 13. Well, what was the impact of the increase in listings on asking price? So I go over here and I look at our current list price, and here's week 13, and that's when they started coming down. Week 13 is the middle of March. So again, as list price, as inventory climbs, asking prices are forced to come down. And now look where we're at. All of a sudden, right about here, week 37, we haven't budged. We're flat. So if I go back to week 37 here, we went up slightly, but we're coming down. So it's forcing listing prices to kind of stay in this holding pattern. So until in January, if our listings start climbing up, then you can expect those asking prices to come down. And when I look at price changes, we had some spike up in price changes in November, but nothing really earth shattering. So it's just, once again, the correlation between supply and demand kind of jumps out at you right there and shows. And we're just sitting there. We have 8,300 active listings today, or 18,300. And I'm so used to saying 8,300. And
no kidding. We were stuck in that range for a while.
Yeah. We've gone back to the old regular 2,200 7-day moving average right here again. See how that line just went back to where it was?
Same damn boring YouTube. We're gonna get boring again. It was exciting there for a while.
It was. Now, speaking of exciting, tell me, so the PPI numbers came out there, which Producer Price Index, right? And the headlines say that inflation is hotter than expected. So you would expect rates to do what?
I mean, there was mixed inflation numbers. I mean, it's, I don't know some days to be.
I saw that news this morning. I went right to the rate sheet and thought,
there's mixed inflation numbers. The PPI numbers, came out. The year over year, it's, you look at the real number. What were the expectations? The expectations are expectations. It's like, let's look at the raw numbers of what's going on, because, I kind of say screw expectations. Look at, obviously that does create market, swings, but the year over year, there was a big drop. and they're expecting like 2/10. It came in 3/10, but the year over year has obviously decreased. From 8.1 to 7.4 in decline year over year. So the bond market was expecting a little bit more of a decrease, but they're expecting like 7.3. So they're off by, they're off by 1/10. So obviously, in the big scheme of things, they're kind of, I think they're counting nickels. Let's look at the pull back and look at the big picture. I think the big picture is that things are overall improving. Things seem to be moderating a bit. So today the market was down 14 basis points, or the 5.5 coupon. The U.S. Treasury was up 9. But we're seeing this once again. We're seeing this. I'll blow this up here if I can. I'm not as adept as charts as you are, but you can see how we're kind of. This was a ceiling right here. As I explained the other day, we broke out of this line right here. This broke out of here, and there's support now. You can see how rates are kind of laying on this support line right here at like 101. So obviously it's kind of waiting in the wings to see what happens, because next week is going to be a big week with CPI numbers coming out Tuesday, and then Wednesday you get the Fed meeting. So it's going to be some jostling around, and it's like the bond market has a tendency to build up pressure, and then it'll move up either way.
We'll have a lot to talk about at Oso Brewery on Wednesday, won't we?
Yeah. Exactly. So, but overall, looking at things the last 30 to 40 days, 30 days really since, November, we had a good day here. Things are kind of getting, tapered down a little bit. We're not having this these wacko psychedelic days where it's up 80 or down 80. It's just insane. So, but we are going to have an interesting day, next week, next couple of days. But the way it's looking,
insanely volatile, if anything.
Yeah, and I think based on what Barry has been saying, obviously, I've been following him, and this is what the mortgage-backed security market, MBS highway. He feels that the inflation numbers are going to come in even slightly lower. So he says to float right now because he thinks we might see some positive numbers. If somebody's looking to do something short term.
Yeah, I want to touch on another guy that I follow in just a moment after we answer Ernie's question. He goes, getting new underlayment on his 24 square foot home, 2 new AC units. Will that add much more value when we sell next year? Kind of depends on where the market is first, Ernie. If home prices are steady, yes, yours will be more attractive to the house next door. New AC units and new underlayment right now are almost an expectation versus an improvement, but it helps. So you think of it in terms of, if you didn't do that and then you had the inspection, they would be asking you to spend that money. So it's money that you probably would have had to spend anyway or give away in a credit. So, I know AC units are, what are they, about $8,000 a piece now? And then underlayment, a 2,400 square foot house is probably 15,000. So they would have asked for that as a credit after the inspection. So the fact that you're doing it now helps avoid that pain. And so it should help move the house. Where you, as far as saying, well, it's going to add 15,000 value, impossible to tell because we don't know where it's going to be. And that brings me to 27K. So I wasn't that far off.
Yeah.
So and I assume that's total, Ernie, that for the roof and the AC. Stephen Van Meter calls himself like the bond king.
Oh yeah.
He shared some interesting data today, Pat, on shipping fees and this global drawdown in supply and demand that are really pointing to some heavy deflationary moves getting into next year. And he also said, when the Fed either eases monetary policy or tightens up, it takes 6 to 12 months to feel the effect, and March will be 12 months. So whatever effect we've had from pulling back on the liquidity that we have will be fully felt by March. And he feels it will be. What's that?
You think fully felt, or I mean, it'll start to put a kink in the armor.
Well, yeah, that's probably better stated. But the inflation scenario is going to be something we'll be looking at in the rearview mirror. He feels by that time.
Yeah,
$27K for just the roof. Well, it's gone up last time I've checked. Wow,
Jeez.
that's a lot of money.
Damn.
So it's interesting to watch. So you've got your guy Barry saying the inflation numbers are going to start really improving, and then you've got Stephen Van Meter saying global pressures are actually going to create more deflation than inflation, and then is the central bank going to have to come in and inject a little more liquidity again? Are we just going to ride this economic roller coaster for another decade?
I mean, they say it's going to, I've seen some people talk about the fact it's going to be here for a little bit longer than we expect. And, the Feds, you hear this talk about them pivoting, but I think they're going to keep, they'll keep do this rate hike. And who's to say, then maybe they put a pause on it, but they're not going to bring rates down. They're just going to keep them at the level for a while and see what happens. Because then I don't think they're going to pull the trigger right away as soon as they see one number. I think they're going to let, a couple data points come through.
Yeah.
They'd be stupid to pull the trigger right, drop rates at the first sign that they see something crack downward. I think they're going to, it's all signs are pointing that they're going to keep it, if they're running at 75 miles an hour, they're going to keep running it at 75 miles an hour for, they're not going to let ease down to 60 or 55. They're going to keep it at 75 rather than going to 100. They're going to keep it at 75.
Well, talking about rates, you shared that chart with me showing rates and fees.
Yeah.
Because we always joke, Pat, what's my rate? We're going to call you and ask you what your rate is. I think that chart really makes a difference there. Can you explain it a little bit? It's a bit of an eye chart, and I know if you're watching this on your phone, it might be a little hard to see, but I think we can explain our way through it a little bit.
Well, here, if I can, I'll try to blow it up even further. That's good.
Yeah, there you go. That's great.
Oh, shoot. I pulled up too damn much here. Hold on. Got too big.
Right there. Perfect.
Yeah. I mean, we always joke about what's my rate, and you said that, I can go, 599, 587. It could be any of these rates, depending if you want, you can go, I know my video is covering up, is a 6.25. There you go. 6.25. If you want a credit, and I've talked about this, and like I said, this is kind of an educational couple of minutes here. I've talked about the buy up or buy down. The buy up is meaning, you pay a little bit more in rate to get maybe a credit. If you're short, these are credits I can give toward closing costs. And then this is, down here is where you buy down the rate. This is a permanent buy down. This is not a 2-1 buy down. That's a different.
So if I look at 5.999,
yep,
it's going to give me a $486 credit to have that rate. But
yeah,
if I want to go to 5.625, I'm going to have to pay $9,229 to get that rate.
Exactly.
Or
now
ask for it as a credit from the seller to buy down your rate.
Correct. You could do that. I mean, but the point I kind of came across, I was looking at I pulled up these rates. This is for a 970. It's a bigger purchase, so the numbers would change. But 975 purchase, 25% down. But as I said, people would laugh about what's your rate. If somebody said, what's my rate on this? I'd say 599 is basically credit $486. My job, anytime I lock, is to try to find that sweet spot. Now, the point I'm really going to try to drive home to people is whether you call me or Joe Smith down the street, or, there's differences in retail banks versus brokers, because retail, obviously, as I've told you before, they got regional vice presidents, regional presidents, regional general managers, branch managers. They got marketing. So they got definitely a different level of cost built into their system that really ultimately the client pays for. But okay, 599, 486. But what I want to drive home is there is different rate steps within this rate sheet. And what I'm going to say is 486 to 348. That's a difference of 39.44, right?
Okay.
Now,
yeah.
each one of these step downs and pay, this is the monthly payment. It's about $57, $58. So 57, 57, 57 going, you go down, every month, you can a little bit lower. But what I want people to realize, if they do call somebody, and like this company that's got these rocket ships, they're going to quote you one rate. Well, here we're at, we're at 5.75 today. It's going to cost you $8,000. And the average Joe doesn't really, okay, I'll take 5.75. It's a cost of $8,000. But I'm telling you right now, I know these guys are not going to mention to them, well, what 5.875 is only going to cost you $3,400. That's a difference. This difference from 486 to 3458 is 3944. But going from 3458 to 8120 is a $4,600 difference for the same eighth of a point step down. And you notice here how it goes from 8120 to 9222. So you see how the step down is smaller. It's kind of like walking out in the water, and it's 2 feet, and all of a sudden it's 10 feet. Like shit. It's just like it just jumped. It just fell off. So that's my whole point is be smart when you call. And this is what I try to give people a breakdown when they call. I'll go over it with them and say, hey, 599, because people always want to get the lowest rate. But I said, you know what? You go to 5.75, it's going to cost you $8,500. The difference between 599 and 5.75 for only basically about $100 a month in difference in payment. So that's annualized. That's $1,200. I mean, you're 1,200, 9,500 divided by 12. You're looking at a 7-year break point to go from 599 to 5.75. So it does not make sense to go to 5.75. But I'm telling you right now that you're not going to get this information with every.
You'll get it on closing day.
Yeah.
It's buried into the loan docs.
Well, it'll be at the the loan estimate, but like you said, when people call, they're just gonna get one rate and say, okay, I'll take that. But people don't realize there's options within. This is just one set of rates right here for one scenario. There's options within that scenario that might be cheaper than other scenarios. So just beware, because like I said, the step downs are definitely different in terms of cost. That's my PSA for the weekend.
I think that's great stuff, because I mean, you always hear about we can go down an eighth for so many points, but this is telling you flat out, I can give you a $489 credit now, or it's going to cost you $3,400 to go down a quarter of a point. And so when you're crafting a purchase contract for the seller and you're asking, well, how much should I ask them to buy the rate down? This is where you get that real number. And well, if I ask them to contribute $3,400 for a rate buy down, I know I can get a quarter of a point.
Yeah, but is it worth it? Is it worth it to get the quarter?
Well, it's worth it if they're paying for it.
Oh yeah.
So I think that's the important lesson to get out of that chart that you showed, that because I get all the time. They go, well, how much should I ask for to buy down a rate, and what do I get with that? And so it's very helpful when you get with my buyers and go, okay, look, here's 3 scenarios. If you can get them to give you a $3,500 credit, your payment will be this. If you can get them to go $4,500, your payment will be this. And so, but it's nice knowing before we write the contract.
Yeah.
So I think that's great stuff, and I appreciate you showing that.
And I just think that I just want to make there is different break points as far as it might be too expensive to buy something down and say, okay, this is my whole job. Like you said, once again, is to find that sweet spot where you're not paying too much and not you can where's your value, So
trending topics. You probably came in a little bit later, and you got mixed in with the millions and millions of other viewers that we have. It's your question: how many? I touched on Open Door, and what I showed here was they've done a very interesting thing here. They have put 182 homes on temporary off-market status because they're going to start renovating them a little bit. Now, if I look here and I say, well, how much does that leave as active inventory with them? I'm going to guess they're about 1,100 now. So let's see. I was off by 6. So
wow.
write that down, Pat. The one time Rick was close. So that Yeah, 1,094, and they were 1,200 last week. So they've decided to go, pull them back, guys. We got to wash some windows, and so they'll do something. Now, if viewers out there, if you want this list of the temporary off market, send me an email at rick@rickhelps.com and I'll shoot it off to you, and you can scroll through it. And it's as you can tell by the dots here, they're everywhere. So they're all the way down to Casa Grande and so, but they're the greater Valley. So a lot of homes. Interesting to watch.
Looks
so,
like it's like when I go on Match.com, I see all these women, all these dots. It's like, okay,
we got to get you off Match.com. Yeah. Either that or we just got to change the topic.
The housing market's kind of like Match.com. You got a lot of profiles and everybody just kind of looking at them and not doing anything about them.
Well, there are some when you click on, you go, whoa. So,
I'm sure you've done that with me.
I heard a comedian yesterday that said that they say that out there are 5 people on average worldwide that look just like you, and only better. And she said, that means if they ever did a story on my life, I wouldn't get the part.
Tyler, I've been on Tinder, but it's just, oh God, I'm telling you, it's just, it's a mishmash of everything. It's amazing.
Yeah.
It's like the real estate market. Like
Tyler, I'll have to tell you the story about the British woman one time that pretended.
Oh yeah.
British. She's like, well, how long were you in? Did you grow up in England? No, not quite. Your parents from there? No, actually, no. Grandparents? Yes. Oh, okay. So how'd you get the accent? Oh, it was genetic. I've never heard of that.
Well, didn't you meet her or something like that? And then she lost her accent. Yeah.
I met her and it came and went.
That's funny.
Quite the strangest thing I'd ever seen. So here's supply index, market index, demand index by city, showing here that Phoenix has good supply, and the market index is kind of in the red because demand is so low. So you go out here to the outlying areas like Buckeye, where there's all that new construction, and they have an excess of supply. That's what red means. Their CPI number is 47.5, and the demand is low. So the supply is high, demand is low. So they're getting hammered because you've got all that new construction out there. So you see that in Buckeye. You don't see that in Chandler because they don't have that much.
Are these new? I've never seen these before. Did you come across these, or are these new?
They've always been in the Cromford index, but I don't
hide these from us.
Yes, well, I got to save something for you.
Yeah, true.
Here's Maricopa, the same as Buckeye, so 50.2, and then Queen Creek was the other one, which has got a lot of supply, and their sales and demand is low, so they're at 49.6. You get up to places like Paradise Valley, and all the dynamics change quite a bit. Big difference between Sun Lakes, I noticed. They have still have like some low supply. Demand is low, so they're kind of in the yellow area. But Sun City is quite a bit different. Their supply is a little bit more, so their market index is down. So you got 60.9 there, and Sun Lakes, which is south of Chandler, sitting there at 102.5. So if you were thinking of listing in Sun Lakes, it's not a bad time because that number is going to pop in February. And then you'll have more competition. Now, a lot of snowbirds come down here and then they leave for Christmas and then they come back. And then when they come back, they don't like to list their homes when they're not home. So when they come back, they'll be putting their homes on the market. But just like everything else, if you don't price it accordingly, you're going to end up being like Open Door.
It's pretty interesting how you can go to city to city and shows you the different how things are kind of area to area change.
Yeah, this is the chart for the visual. So Mesa, you can see there, and then you go to Peoria. So I do like cruising through that every once in a while. And Scottsdale is supply is still low, demand is low, but they're kind of hanging in the green. It's still a bit of a tiny bit of a seller's market in Scottsdale, but not by much. Now homes are still moving out there. They're moving kind of slow, but keep in mind that prices right now are just staying right here. The number of concessions that you're getting are climbing. We were sitting at about, I think it was 47%. And seller paid closing costs. Let me take a look at this real quick and see what we come up with here. So we're 47.8. So, and it went from 47 even. So while their prices are staying level, their asking prices, half of them are willing to give you something. Ties back to that chart you showed on pricing for mortgages. Don't be shy and ask. You're not quite getting the wholesale bargain on a home that you're thinking you're going to get. The prices that I was showing you on that one chart here, we are down below 2021 pricing already right here. This is the average price per square foot that homes are listed at. It's already below 2021. So, and that came off a high here, and that's about 11%. I made a comment and said, another 10% is highly probable, but it all depends. It all depends on what happens with that inventory chart. And that would bring us down to probably about here at 2020 levels. Not alarming. It's not going to knock anybody out of the saddle too bad. I've been, I don't know how many recessions I've lived through, but there were times you got through a recession and you just didn't even know it. But we have so much information now that it's right here. So, so speaking of recessions I've lived through, Sunday's my birthday. And so put in the comment section, how old do you think I'm going to be on Sunday? And I'll enter you into a drawing to win a coveted Rick Helps coffee cup. So
how exciting. You can't beat that.
You just when you thought the weekend couldn't get any better, something like that comes out. It's just
you're gonna have to give me a tutorial on chart navigating. I'm always impressed by your chart navigating. It takes me 5 minutes to put up one stupid chart.
Well, and when you do, we get this.
Yeah, exactly.
Thank you for sharing that charts, and when I put them up, it's
I feel good.
So I have take 25. I act 25. And Tyler actually knows 49, Marion, 63. This is going to be fun to watch. So we'll see if it's either going to be really good for my ego or really bad for it. So
no kidding. I'm going to do that in my birthday in June.
Yeah. So, well, any big plans for the weekend, Mr. Pat?
We got our company Christmas party.
Cheese platter in your break room?
No, it's things are still moving along at Price Mortgage. We got more than a cheese platter. So all right. If we do have a cheese platter Christmas party, then I'll tell you, I'm like, things are looking pretty doom and gloomy for us. But I mean, it's gonna be happy birthday. It's gonna be a good party, but and then just doing some work, just kind of putzing around, nothing crazy. But
sounds fun. I'm showing some homes tomorrow in the Chandler Gilbert area, so it should be nice. Good. So it's so staying busy when I thought I'd be just dead on the doornail in December, and I am not. And I know Jackie says she's showing like 18 homes over the next 3 days.
Yeah.
So and Ruby's busy as well. So there are people out there looking. So I want to wish everybody a great weekend. Have a fabulous and safe Friday night. And Pat, thanks again for showing me. And good luck on Match.com. So
all right, thank you, sir. I'll keep it posted. Thanks, everybody.
All right, see ya.
Bye.